FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and we are speaking from the Metals Investor Forum. It's a big mouthful. In lovely Vancouver, Canada, it's heated up. The rain is gone, and it's blue skies anywhere you look, and especially at the Rosewood, Georgia Hotel, where we're watching a number of companies present. A lot of good companies, a lot of companies that I never heard of. I didn't even know that they existed, which initially made me a bit suspicious. But now, after watching a number of them present, I see that they really are. There's some good companies here. But how do you separate the wheat from the chaff? How do you find the company that's going to be the next Newmont, the next Homestake? That's really what it comes down to. There's so many newsletters that deal with it. There's almost as many newsletters out there as there are companies. But person who's been pretty spot on in a lot of his calls over the years is Roy Byrne. And Jordan, welcome back to the show.
Hey, Kerry. Thanks so much for having me back. It's great to reconnect with you.
And likewise, and here of all places. So you gave a little presentation earlier in the day, your forecast for precious metals. And the forecast, if I might summarize it briefly, is not necessarily blue skies ahead, at least initially.
That's right, Kerry. Looking at in the months ahead, I think that precious metals are going to be in some trouble. I mean, looking at the fundamentals, I mean, my work, historical work, shows that gold is really driven by negative real rates or falling real interest rates. And the problem right now is inflation has peaked. You can see that in the data, and you can see it if you look at charts of commodities. Commodity prices look to be rolling over. And then if you look at interest rates, I don't think interest rates are going to go that much higher, or even if they do, I don't think it's sustainable. But for the time being, in the next couple months, I think interest rates are, maybe they'll go up a little bit. They're going to be stable. I mean, if you look at the Fed, we know one more hike is priced in. They'll probably hike again in September. And so if you factor those things in, that tells you that real interest rates, while they're still going to be negative, they're going to be rising. So they're going to be less negative. And in the medium term, that's negative for gold. And so that negative fundamental development is being reflected in the technical outlook if you look at metals prices. So I would say for most of the rest of this year, I'm cautious, bearish on metals. But as I said in my talk, I do think that we're setting up for a really good 2018. And coming into the year, that's what I thought. I thought that 2018 would be a much better year than 2017. So, I mean, I guess rain in my forecast, but eventually I think we could see a lot of sunshine next year.
Now, it's interesting you say inflation under control. Well, maybe commodity inflation, but look, got my car insurance bill up 4 or 5%. Got my health insurance bill. I didn't want to say how much that's up. Everything that you need, all right, is going up. Maybe even gasoline has pretty much hit bottom. It's gone up in price. It's becoming less and less linked to the actual price of crude. So many things that you need in your day-to-day life, food, travel. I will say airline ticket prices are down a bit, but so many of the things that you need really are going up in price. So I don't want to call it inflation, because consumer prices aren't really inflation. They're a result of inflation. But do you really think that we've turned the corner?
Well, I would just stop for a second, because I'm giggling because when you mentioned airline prices are going down, yeah, they're going down, but you run the risk of being dragged out of an airplane. But that aside, Kerry, I think your observations are correct. I'm seeing that also, but markets are forward looking, and I wouldn't say inflation is going down. I'd say the rate of inflation, it's obviously up until now, the rate of inflation has been rising. And so that's what we have to, markets are really about the marginal change, what's happening. So inflation is certainly going up, but the risk over the next quarter or 2 quarters is that the rate of inflation, again, how fast it's going, is going to come down. Maybe it's going up, 3% now, and maybe it's only going up 2% or 1.5% temporarily for the next quarter or 2. I do think once we get into next year, and perhaps after the next recession, maybe we have a mild recession at some point. I think when you factor in the tax cuts, you factor in the infrastructure spending, which which is going to be a global thing, by the way, not just in the U.S. You factor that in, you factor that we're many years removed from a global financial crisis. That's when you could see inflation, the inflation that people have been talking about for so many years, including me, that hasn't materialized. I think that's when you could really start to see it accelerate. But for now, over the next 3 to 6 months, it's possible that the rate of inflation inflation still goes up, but it's not going up as fast. The rate of inflation comes down a little bit temporarily.
Yeah. Now, I would argue, and somewhat persuasively, I think, that we really are in the midst of the next infrastructure reinvestment boom, rebuild, even without Trump's infrastructure bill. I look especially in the Northeast, but I'll tell you, in my adopted home state of Florida, every major highway in that state is currently under construction, under expansion. In Texas, every major highway just about in the state is being expanded. I don't know that rail service is like mandatory in these places, but they're actually adding subway tunnels in New York. They just opened the 2nd Avenue subway line, which is they've been talking about for only 90 years. But around the country, this infrastructure build out is already taking place. So if and when, and I believe the Trump infrastructure bill is probably the easiest of all of his agenda, because no congressman ever got fired or voted out of office for bringing money home to his district or her district, right? So I believe we're in the midst of the infrastructure build out right now, bigly, as the president would say.
Gary, that's an excellent point and great observations that you made there. I really enjoyed hearing them, and it made me think of, I saw something, in my hometown of Seattle. I forget where I saw it several months ago, maybe even a year ago, where it said that downtown Seattle now has the most cranes out of every city. I don't know if that's per capita or if it's correct, but certainly there's tons of building going on in Seattle. And you gave many great examples there. It's going on all over the country. It's already happening. And Carrie, just think if the economy rolls over, statistically, if we get close to a recession, as you said, that's going to be the easiest thing to pass. And then you'll see, money going into some major building, bigly, as you said. And I think that is going to be the driver of less so for gold. Gold always moves first. The commodities as a whole, they tend to follow gold and silver. But looking at the other, it's going to be good for gold, but more so for the rest of the commodity complex. And that will be, I think, a big driver of the next commodity bull market. And maybe that really starts to kick in 2018. As I said in my talk, I think we need to see some weakness first in the U.S. equity market and also the economy, because that weakness would be a catalyst to get not just U.S. government, but it's going to be a global thing. It's not just a U.S. thing. If you talk to experts, other countries are going to do this too, because look, interest rates are very low, and there's too much debt for you can't keep lowering rates. The declining marginal product, debt and rates. Governments are going to have to pick up the slack. And as I already said, and as you pointed out, it looks like that's going to be the driver of the next economic cycle. And I think commodities are really poised to benefit from that. But where we are here and now, probably not going to happen this year. We just need to be a little patient.
Yeah, I tend to agree with you, although I think the mid third quarter, late fourth quarter, I think the cycle's turning a bit for precious metals, and we'll just have to see. A lot of cycle guys that I talk to seem to think that the second half of the year are going to look a lot better than the first. So we got a lot of companies here. There must be 30 companies or so, most of which I have never heard of. Any ones that catch your eye there?
Well, the ones that catch my eye, I'll just mention Nighthawk Gold is one that I own. I joke, I was the first person to cover it, but not the first person to buy it because I'm too conservative. But I did buy that in December, and so that's really worked out well. There's a couple here that I missed. I wanted to buy Columbus Gold back in December, but it jumped, and so I passed on it. Another one, I'm forgetting the name. I know the symbol is AGB, Atlantic Gold, that's what it is. So those are two that I missed, but those three are companies that I generally like. There's a lot of companies here that also I haven't heard of, but I've come to this conference and spoke at it several times, and just going back in the past, there were some companies I didn't really know much about that were at the conference, and then after the conference, I researched them, and down the line, then I bought them. So just because something may not be a buy right now, that doesn't mean it can't become a buy later. We have to be value investors until the trend really takes off again, and be cautious and patient and all that, and just realize that, a good company, the stock price can be too high to buy, but there can be a company that looks okay and maybe it's dirt cheap. Buying something dirt cheap like that protects your downside, and it could be a better investment in the long run. So those are kind of my thoughts on these companies right now.
Yeah, and we've seen a lot of company presentations. Is it too early to buy now, or is this the time to be loading up?
I generally speaking, I think it's too early to buy now. I mean, there's a couple things I'm looking at that are probably a good buy here and now, but given my outlook, I think we're going to see a better buy opportunity around the middle of the summer. I could be wrong. Maybe it comes in the fall. But yeah, as you know, Kerry, I like to talk. I like to ramble on, but I would think, it's generally speaking, it's a little too early to buy right now. I would want to wait till the middle of summer. I think you might get some better deals. One thing we should note, GDXJ, that whole huge...
I wanted to talk about that. So GDXJ, which is the ETF of junior miners, is undergoing a rebalancing revamp, and that's going to have effects both far and wide for companies that are being reduced in their representation in the GDXJ, companies being increased, and a lot of these companies being added to it arguably are not juniors. So tell us your opinion there.
Yeah, my opinion on that, as you probably caught in my talk, is that some of these companies in the GDXJ, even before this rebalancing fiasco, I mean, you have companies in there with $1 billion market cap, 700 million. There's nothing junior about those numbers. But yeah, and I think, Kerry, because I have some of my own junior indexes. I mean, I make baskets of stocks and I track them. And I mean, this is kind of subjective. It's not super objective. But I think GDXJ, because of this, is maybe trading 6 or 7% below where it would be if we didn't have this rebalancing fiasco. But I think what's going to happen, Kerry, is maybe we get into the summer, GDXJ, if it keeps going lower, I think once the rebalancing completes, at some point you could see an outsized gain in GDXJ, like a boomerang type move. It's going to be hard to predict exactly when that's going to happen, but I would not be surprised to see in the summer to see some juniors make really, really strong moves. Even if maybe the sector has more trouble in the fall, I still think you could see, because of this rebalancing effect, that you could see really strong moves begin at some point in the summer that are just stronger than we'd normally expect, because it's the boomerang effect. Because as I said, now it looks like GDXJ may be 6 or 7% below where it really should be trading.
It sounds like a great arbitrage opportunity to buy the GDXJ and sell the stocks, especially the ones that are getting rebalanced or dropped from it.
Right. Yeah. And it's difficult to know exactly. I mean, there have been some people out with articles talking about how much stock A and stock B are going to be rebalanced. But I like the idea of buying GDXJ for a trade if it gets really extremely oversold. I mean, it's very oversold right now, but the rest of the sector is not as oversold. What I'd like to see is the entire sector is very oversold, but then GDXJ is even more oversold. And then so when everything is sitting like that, then you buy GDXJ for that boomerang move.
Yeah. It seems to me it's just a natural arbitrage. Not that I'm the best trader, but it's easy enough to figure out these stocks being overbought or oversold vis-a-vis the index, and then the index being depressed because of uncertainty. So it could be a real opportunity to pick up a quick 10-15%, maybe more. But if you arbitrage it, you'll lock in that profit today. So it's a little hard to do. Some of these stocks are really small caps, and it's really hard to sell them short, but it's like a guaranteed profit. Anyways, hey, appreciate you sitting down with us and sharing your thoughts. Just tell us your newsletter, where we find it, what the deal is.
You can go to thedailygold.com. I post all my free work there. I post interviews like this. I do video updates. I usually write one article per week, so I put out a lot of free content. My subscription, you can get it at thedailygold.com/premium. You can add, because we're at the Metals Investor Forum, you can add MIF at the end of premium, and you can get a 33% discount.
All right. Well, not quite free, but getting there, and sounds like a really good deal, based on all of your work that I've read, and you're always on Kitco, other places. It's definitely well worth your while to check out Jordan's site and think about a subscription, especially at that killer price. Jordan, it's great talking with you. Oh, by the way, if you got any questions for Jordan, for myself on this, any other interview, send me an email, kl@kerrylutz.com, kl@kerrylutz.com. Twitter feed's @kerrylutz. The Facebook page is Financial Survival Network. Jordan, thanks so much. Be well.
Gary, thanks for having me. It's my pleasure.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.